Hey, good afternoon, traders. Trader Tim from E-mini doing a Monday market analysis video. It's the 8th of February, 2021. Wanted to start off by highlighting the good old Bitcoin here, and I wanted to thank Gamestop for taking some light off of Bitcoin for just enough time to get a nice pullback to the 30,000 level. You can see we're kind of in a pennant as well. So yes, we did pull back to a 50% retracement, but more importantly, that pennant formation with the down trend line here. I posted a screenshot when we were kind of down in this area with the down trend line, looking for a break above that trend line, which we got here, and then there was another pullback that looked something like this back on the 1st of February. That was another buy point. So I sold some at the beginning of January. I actually sold a fair bit in January, put a lot of it in Ethereum, and then took the other gains and put some in at the 50% here, about 30,000, and then on the pullback again at like 33 and change. So the target, at least from the negative 23 perspective on Bitcoin, is 48,000. It's pretty logical that we can make it to the 50,000 mark and then beyond. Today, Tesla announced that they were going to be buying, or they did buy 1.5 billion worth of Bitcoin, and they're going to be allowing Bitcoin transactions for their vehicles, which is cool. So let's turn over to the ES. And interesting pattern here on the daily. I'm going to turn off the overnight hours, but this sort of hanging man that we had yesterday or Friday is somewhat of a bearish pattern. Let me clean up my chart from today here. So this pattern where you have essentially a hammer, but it's in the context of occurring at highs. So a hammer on a pullback, which actually we'll talk about here in a couple of minutes, is a buy signal, but this kind of candlestick pattern where the open and the close are near each other, and then you have the tail pointing down, and then that occurs at highs, is somewhat of a bearish signal. So coming in today, I was a little bit concerned about the ability to make a new high. Breadth is okay, and same with the advanced decline line for most of the day. But a couple of trade setups here this morning. First one was a little long off of the halfway back of the day. Nice little double bottom. And then we set up in a long setup right here, 38.9950. Went up only a couple of points, and then it met some resistance at the top of the first 30-minute range. So that one was good for, a couple of points. And then the next guy actually ended up being a short. We had a double top here, and again, this 39.02 is the high of the first 30 minutes of trading. And so see how we touched it 3 times? Nice little double top, sold off, broke the swing low here, and then set up in the short. Took about what did I have here? 1.5 of heat. It traded well through the 61.8, but starting with that initial 2-point stop on the ES allows for some wiggle room. Not every trade is going to be perfect. Far more trades are going to be messy than will be perfect touches of the 50% and then roll over. So this one, we got an initial thrust down, and I just traded the next 50% retracement. It's 61.8 where my stop was kind of just above where the full halfway back 50% was going to be, so that's why I left it there. But we couldn't move down to lows of the day. Normally, uh, we normally when we find resistance at the top of the first 30-minute range, we can then come to the bottom of the first 30-minute range, and we weren't quite able to do it. We put in this hammer candle here and then moved moved higher. So that one was good for also a couple of points. We got a first target hit right away, 3 points, and then went for another couple of points on the trail stop. So on the 5-minute chart, one thing that we talked about last week is if you look at points where you have like over here, inverted hammer, not quite a hanging man, but when we break trend on the 5-minute, like when we break below a 5-minute candle's low, or here when we break above the 5-minute candle's high, you can look at that as a point of drawing up a trade. So this short, if I link the charts back together, is a drawing where, okay, this red candle here broke the prior candle's low, and so when you draw up the short like that, you already have a break of the 5 minutes. So someone who's not even looking at the fib retracement might be looking for an entry on the 5-minute chart, and it just happens to line up with our entry as well. Same thing over here. If we scroll forward a little bit and we draw up a short from this high, okay, we have an inverted hammer. We break the low and we come down. We didn't get a 50% until the next candle there, and then that one traded at its 50%. So that's why I like the higher time frames, especially the 5-minute in conjunction with the 512, to kind of validate some of the trend breaks, then look for a lower risk entry point on the 512 tick chart. Wanted to turn to a couple of swing trades that I'm in. We got CMG. This guy had a nice pop above the consolidation, but then fell down, and we're sort of just been inside the last couple of days. So I've just got my stop below the low here of the 3rd, and then a couple of nice pops in ABT was the first one. Abbott, little reversal bar pop on Friday, and then a little bit higher today. KBH I've had on the watch list for a while. Finally got that pop above the hammer candle here. Bit of a hammer, not quite, but a bullish reversal. Nice bull flag, and then broke on Friday. Trading the stock, just buying above the high price. Trading the option, putting the option in at the close, and then holding till either, if you have a couple of contracts, selling out at the close on a big rip. So like today, 2 big days in a row, probably want to close out a good portion of the options, especially if you're holding February, because that expiration is going to come up really quick. And then Tesla was another nice little pullback here on Thursday, and same thing, buying above the high of the low bar, this bar here on the 4th, and looking for that one to, go to the moon and beyond, because Tesla can only go up. Isn't that the case? But all kidding aside, things are looking, poised for more moves higher. If we get a pullback, we could very well just round out this inverted head and shoulders. So we have a left shoulder and a dip where a head is formed. And then if we pull back, even if we make it all the way to the bottom of this uptrend line of the channel, as long as we don't take out this, major break of the channel on the underside, we should be just fine to maybe pull back a little bit and then round out and head higher. If we just go higher from here, we'll probably be followed up with a swift move up followed by a swift move down, kind of something like this, where you have a straight up move and then a quick straight down move. Not that the trend is then over, but it does add some volatility and shake things up. So I didn't see a ton of news, I believe, this week on the calendar, but you never know what can come out in Twitter these days and really shake things up. So pay attention to earnings if you are trading individual stocks. There are still a lot of stocks with earnings out there. And if you have questions, drop them in the comments below. Thanks for watching. We'll be doing a live trading session tomorrow morning, Tuesday. You can check that out, eminimine.com/VIP. Thanks and have a great week.